Hello, traders, investors, and crypto enthusiasts. Welcome to our channel where we deliver deep dive analyses, hot news, and reliable projections about the blockchain, Web3, and digital money trends. Today, we are diving into a shocking event that rocked the digital asset market, Israel's attack on Iran, which occurred on Thursday the 12th. This unexpected geopolitical incident triggered intense repercussions, not just internationally, but also in financial markets, particularly cryptocurrencies, which suffered billion-dollar liquidations within hours. According to CoinGlass data, nearly $1 billion was liquidated in the last 24 hours, with most losses occurring in the final hour after the attack announcement. The broader crypto market plummeted 8%, with Bitcoin BTC crashing from $108,000 to $103,500, and altcoins like Ethereum ETH, Solana, SOL, and XRP suffering even steeper drops. Pi Network, for example, lost 16% of its value in just 1 hour. Why did this happen? The role of FUD. This sharp movement reflects a well-known phenomenon among investors: FUD, fear, uncertainty, doubt. The mere mention of a military escalation involving regional powers in the Middle East was enough to trigger panic, prompting mass sell-offs, liquidations, support collapses, and widespread losses. Why is the crypto market so sensitive to geopolitical events? The answer lies in the market's inherent volatility. Unlike traditional assets like stocks or treasury bonds, which have decades of data and regulatory frameworks to cushion shocks, cryptocurrencies remain relatively young, highly speculative, and prone to large-scale emotional reactions. Israel's strike was interpreted as the start of a potential global conflict, drastically increasing perceived risk. This perception directly impacts high-risk assets, with cryptocurrencies still topping that list. JP Morgan's warning intensifies the panic. JP Morgan warned that a direct war between Israel and Iran could spike oil prices, drive up global energy costs, and push inflation, especially in the US, to nearly 5%, a catastrophic scenario for financial markets. This would likely force the Federal Reserve to adopt an even more aggressive interest rate policy, draining liquidity from markets and hitting risky assets like crypto. Market reactions, liquidations, and chaos. Exchanges like Binance, OKX, and Bybit saw a surge in selling activity. Stop-loss orders were triggered en masse, with hundreds of thousands of leveraged traders liquidated. Bitcoin's recovery from consolidation and its attempt at a new all-time high collapsed. Technical charts show BTC losing critical support levels, now dangerously close to strong sell pressure zones. If tensions escalate further, BTC could test supports at $100,000 or lower. Altcoins fared worse. Ethereum dropped below $5,000. Solana fell 1%. XRP lost 9% in minutes. Pi Network, still consolidating its mainnet, saw wallets emptied as users feared total value loss. The rush to stablecoins. Demand for stablecoins like USDT, USDC, and DAI spiked, signaling investors' defensive stance amid instability. What could change this scenario? Short-term outcomes hinge on the conflict's evolution. Diplomacy. If hostilities cease, markets may stabilize and recover. Escalation. Further attacks or international involvement could deepen crypto's decline. Institutional behavior is critical. Hedge funds and companies holding Bitcoin as reserves may reassess positions, triggering more selling pressure. Social media amplifies FUD alarmist posts. Conspiracy theories and fake news spread rapidly, intensifying panic. Always rely on credible sources and maintain rational strategies during chaos. Opportunities amid the chaos. History shows crises create opportunities. Large investors, whales, often buy discounted assets during fear-driven crashes. Past events like China's crypto crackdown, FTX collapse, and Terra Luna crash were eventually overcome. Patience and strategy remain key. Final thoughts. Israel's attack on Iran caused a crypto market earthquake, $1 billion liquidated, 8% total market drop, and double-digit declines across altcoins. Yet these moments teach valuable lessons. Never invest based on emotion. Always have a clear strategy. Prepare for the unexpected. We'll continue monitoring developments and providing updates here. If you want serious analysis, reliable data, and smart insights on crypto, subscribe to our channel, hit the like button, and enable notifications to never miss a video. See you in the next episode. Until then, happy trading.